Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is up 0.6%. Now, this is actually a really strong performance today from Tesla, like really strong, because a lot of other areas of our markets are selling off today. They're not doing great. This is not another good day for stocks. In fact, let me show you this. The CNN Fear and Greed Index is at 31. You are deep into fear territory. A lot of the internals of our markets do not look great right now. Why? It's because China, trade, relations, the first areas of our markets that go are the first stocks that are going to get sold if we're heading into a recession, if we have a decoupling with China, okay? Tesla, doing pretty good in the last couple of days is actually a really good sign. And we'll talk about this more throughout today's episode. We did have some news from China today that sounds pretty good. Hey, we'll see what happens next, but it does sound pretty good. We're also going to get into, obviously, other broader market news today, headlines coming out that are moving markets, and your Tesla stock specific news. Ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. And let's get started. Now, first things first, it looks like Tesla is about to break out. Like what? What has happened? In the last couple of days, Tesla has been hitting these higher highs. Tesla is now the highest it really has been, considering hopefully we close here or rally higher. This is as high as Tesla has been since October 8th. About 8 days ago, 5-6 trading days? Okay, so Tesla's hitting a new relative high that we haven't seen in the last couple of days, okay? On a day where the broader markets are just not doing great is a really good sign. Like, look at this AI stock, down 4.5%. Look at this AI stock, down 3%. Look at this energy stock, down 11%. Look at this AI stock, down 1.3%. Another AI stock here, down 3.5%. Quantum, like Rigetti, was down about 8% just a few minutes ago. Okay? You get the idea. The higher flyers in recent days are selling off quite a bit today. Tesla has already been doing well in the past couple of days, but excelling on a day like today. In this market environment where people are nervous about a potential recession, they're nervous about decoupling with China, they're going to flock into the higher quality AI companies, right? That's why, look at the S&P today. It's up 0.5%. IWM down 0.2%. And really under the surface, that IWM looks nasty, okay? Tesla is an obvious place to put capital to work, right? Because it's bursting with AI growth over the next 12 months. There's likely room for margins to get better. There's probably upside to deliveries. But if we decouple from China or have a recession, Tesla will probably survive that, right? Management team, blah, blah, blah. But these other stocks, maybe not, right? That's the idea. That's why people are putting money into Tesla and taking it out of other places. Now, inevitably, I think things will calm down with China and you will see these high flyers fly again. But for now, it does seem to be to Tesla's benefit. Now, getting started, first things first with your Tesla stock breaking news. This is not actually Tesla breaking news, but it's Waymo news. Waymo and DoorDash are partnering to make autonomous food deliveries in Phoenix. Quote, in the coming months, DoorDash customers may be matched with a fully autonomous Waymo vehicle for their next delivery from a participating merchant across our 315 square mile service area in Phoenix. Quote, we are excited to make everyday errands easier with the Waymo driver, offering the added peace of mind that comes with our safe and reliable technology. Through our partnership with DoorDash, we leverage our proven delivery experience to provide customers with a seamless, contact-free way to get items they need, whether it's groceries or a quick bite. So, yeah, that's any improvement or partnerships or anything in autonomous deliveries, right? Or autonomous vehicles is a positive for Tesla. It is going to be easier for Tesla to get similar partnerships. These are not exclusive partnerships, okay? It's going to be, easier for the public to catch on to Tesla's services when they do. All around, a positive for the industry and a positive for Tesla. Barclays analyst Dan Levy has raised his Tesla price target to $350 from $275. Quote, Tesla enters Q3 earnings with two contrasting stories, namely an accelerating autonomous and AI narrative, bolstered by Elon Musk's proposed comp package. The firm is expecting a Q3 EPS beat, supported by gross margin and volume strength, but is, quote, leaning neutral to slightly negative into the print following a rally given its muted view on fundamentals going forward, the analyst added in a preview. Tesla's FSD V14.1.2 is starting to roll out to more Tesla owners. So the second update to V14 in just the past week. Sawyer Merritt says that last night he took his first drive on FSD V14.1.2 with the new Mad Max speed profile. Mad Max mode drives very quickly and confidently. It accelerates much quicker off the line. He says he loves that, and maxes out at 85 miles per hour on the highway. If you like to drive fast, you're going to love this new mode. It may not come through on screen very well, but Mad Max mode makes the car zoom around town like it's on a mission. It's unlike any FSD mode Tesla has ever released before. Hurry mode now maxes out at 80 miles per hour on the highway, while the new sloth mode matches the speed limit, which for me tonight was 65 miles per hour on the highway. The Tesla Model Y has been awarded gold at the 2025 Australian Good Design Awards, joining an elite list of products or projects recognized for excellence in innovation, sustainability, and user experience. Tesla has released a little bot onesie for $55, says From Baby to Bot, inspired by Optimus suit design. The little bot onesie includes a hood to complete the baby's transformation, made from 85% cotton and 15% polyester French terry. I'm going to buy this for my son. Yeah, dude. That's sweet. Now, here are some of the top voted questions for investors so far for Tesla's Q3 earnings call next week. Number 1, what are the plans for new car models? Will Tesla build compact models leveraging the Unboxed Cybercab platform? Will Tesla build a traditional SUV/pickup truck in the Cybercab platform? Number 2, what are the latest robotaxi metrics? Fleet size, cumulative miles, rides completed, intervention rates, and when will safer drivers be removed? What are the obstacles still preventing unsupervised FSD from being deployed to customer vehicles? And number 3, what are the present challenges in bringing Optimus to market, considering app control software, engineering hardware, training general mobility models, training task-specific models, training voice models, implementing manufacturing, and establishing supply chains? That could actually be a pretty big question, since we are expecting a lot of improvement to Optimus over the next 12 months, and we are expecting some commercial sales of Optimus 2026. Now, in option activity yesterday from hedge funds and institutions, you had 156 different trades, totaling $230 million with a positive order value of 83%. Today, you have 46 different trades, totaling $34.11 million with a positive order value of 70%. So although the dollar amount today in option activity from hedge funds and institutions is on the lower side compared to yesterday, the positive order value at 70% still looks pretty damn good. And consider that a win for a day like today, again, when it's a pretty risk-off day in general. Now, you do have short interest of free flow at 2.74%. You have 76.86 million shares that are sold short. You do have 65,000 shares today that are being sold short as well. So a little bit of shorting pressure today. Yet Tesla's still in the green. That's a good sign. And you do have $33.5 billion sold short in Tesla stock currently. Now, in the news today, Kalshi is predicting the government will be shut down for over 40 days. In the news today, China Commerce Minister welcomes Apple to deepen cooperation with China. Wang Yi, a senior official in the China cabinet, if you will, says decoupling between China and the U.S. isn't a rational choice. China's Wang blames U.S.'s restrictive measures for trade tensions. China's commerce minister says he hopes to work with the U.S. and China to find solutions. China's commerce minister says recent China-U.S. trade ties fluctuations caused by U.S. restrictive measures against China. Also in the news today, Donald Trump and Putin will speak today, according to a White House official. Fed Moran says housing conditions are more important than markets. Fed Moran tells reporters he is not focused on asset price bubbles in a push to lower rates. U.S. Nuclear Weapons Agency to begin furloughs, the energy chief warns. Fed Waller says, I don't see a need to take monetary policy below neutral, which actually sounds good because if you want to go below neutral, that means you're trying to support the economy, which begs the question, how strong is the economy again? You know, that kind of thing. Fed Waller says once supply chains are disrupted, they may not come back to the prior state. Fed Waller says it would be good for the Fed to refrain from long-run forecasts. Fed Waller says, I personally have doubts whether the Fed should have SEP forecast. That is the summary of economic projections. That is where the Fed basically tells you their thoughts and expectations for the economy, for rates, for GDP, for unemployment, inflation. Fed Waller says, quote, we'd be hurting if not for the decline in labor supply. Fed Moran says 25 basis point cuts is too slow of a pace. Fed Moran says the Fed officials must treat all government policies equally, not only highlighting tariffs, basically saying, hey, what about provisions in the big beautiful bill? What about this or what about that the Fed does not seem to pay attention to? They only seem to pay attention to tariffs. And he's saying that's not the right approach. Moran says it would be much better to have government data. India says they are, quote, not aware of the Trump-Modi call. India's Ministry of External Affairs said Thursday they have no knowledge of a reported conversation between Prime Minister Modi and President Trump after Trump claimed Modi promised to stop buying Russian oil. And Fed Moran says we need rate cuts because of passive monetary policy tightening and improve inflation outlooks. He's basically saying, you know, the rates were so high for so long as inflation came down for so long that is passive monetary policy tightening and an improved inflation outlook, which is also fair. Fed Moran says the risks that emerged in this last week add urgency to the need to cut rates. I believe he's referring to the China situation, but I'm not 100% sure. And Fed Moran says the policy has gotten about 1.5% points higher this year due to a rapid rise in the neutral rate. And Fed Moran says the U.S. economy is in a pretty good place. U.S. regulators to offer capital relief to community banks, per Bloomberg. Uh-oh. Fed Waller says inflation is on a path to 2%, and it's not a barrier to rate cuts. Waller says his neutral interest rate is about 100 to 125 basis points lower than the current federal funds rate. So that's 4 to 5 cuts lower. Fed Waller says the rate outlook after October is dependent on the labor market. Fed Waller says he sees slower path of rate cuts if the GDP holds up or the job market speeds up. Fed Waller says if the job market continues to weaken, the Fed should cut towards the neutral rate. Fed Waller says tariffs don't appear to be depressing growth. Fed Waller says an extended government shutdown would be worse for the economy. Now, earlier in the day today, a U.S. trade official says that China is taking actions as though they want to decouple. So again, we heard from China following this statement and said, yeah, we don't want to decouple. That's where I started off this video by saying we had some positive developments in the China situation, this is part of it, right? The US said this, and then China's like, no, we don't want to decouple. That sounds good. Fed Barkin says demand remains solid, particularly among those with higher incomes. She says it is clear that businesses are planning to pass along what tariffs they can. She says productivity growth is improving significantly. She says consumers are spending, but they are not as flush as in recent years and are making choices. And she says productivity seems to be increasing, which could offset some cost pressures. That is basically the headlines we got from Barkin. Moran and Waller are some of the individuals that are really in the running to be the new Fed chair, and those are the comments the markets put the most weight on. And today we got a new AI investor sentiment survey that was released, and boy is it bullish. Well, let me rephrase that. It's not bullish. It's so bearish that it's bullish. Bullish investors down to 33.7%, neutral investors up to 20.3%, and bearish investors up 11% to 46.1%. Neutral investors rose about 3.5%, and about a 9% rise or fall, I should say, in bullish investors. So, yeah, when there's a lot of bears on this AI investor sentiment survey, that is typically a sign that you should be buying this market. Now, again, the CNN Fear and Greed Index today is sitting at 31, which again just shows you how weak these markets are under the surface. Market momentum is in fear, stock price strength is neutral, stock price breadth extreme fear. Again, under the surface, it doesn't look great. Put and call options greed, market volatility extreme fear, safe haven demand extreme fear, and junk bond demand currently in extreme fear. And really, as I've talked about on this channel before, really in the last couple of days, you need to be prepared for anything to happen, okay? You need to be prepared for the situation with China to get much worse. You need to be prepared for it to get much better. How do you invest in that kind of market? Well, on the red days, you got to buy something. Or me personally, I got to buy something on the red days. I want to keep a certain amount of cash on the sidelines in case things get worse. On the green days, I'm sitting tight. Because worst case scenario, the stocks explode higher and boom, I've been buying on the red days. I have a portfolio. I could take advantage of that. The alternate worst case scenario, stocks fall 20%. I have more, money to go out and buy, right? So I'm able to take advantage of the opportunities. That to me is the best way to really navigate this market. That is what we are executing on. Now, if you guys want to come see all of the trades that we are making, all of the stocks that we are investing in on these red days, and how we are really navigating this market to walk away a winner no matter what happens, check that link out down below in the description of this video. What we're doing really at the core theme of it is going out finding AI stocks, energy stocks, robotic stocks, quantum stocks, gene editing and biopharma stocks, software stocks related to the AI theme. These themes are going to be with us for the next 10 plus years. Well, we are going out and making decisive investments in the ones that we feel have opportunity. That is how, we're able to generate these 100, 200% year-to-date returns. It's fluctuated a lot recently, but it's around 170% year-to-date return so far. I mean, we're outperforming everyone, all hedge funds and institutions, because, again, the strategy that we are imploring on these downside moves that we get, we're buying them, staying long for the upside, taking advantage of these secular themes, okay? So if you guys want to come join us, check that link out down below in the description of today's episode. With that said, ladies and gentlemen, have a great rest of your day, and I will see you in the next one.